He's back from his great adventure, Jeff Macke. Welcome back to Mackey's Retail Roundup Live. How we doing, sir?
First of all, I go by Yukon Jeff now after my experiences in the wild. I'm going to have a team of sled dogs. We're thinking I did around. No, it's going great. I just had a fantastic rest. I feel refreshed and ready to go. And look at the consumer discretionary stocks just screaming higher, welcoming me back. Just tooting their horns and saying, welcome back, Mackie. We're going to buy all of us today, and so it's glorious.
All right. Well, Jeff, I will add that the entire market is at all-time highs, so it's not just you. So most people are happy right now. But that being said, let's give a shout out to the discretionary space. It was the most punished during the whole Liberation Day fiasco. So it's back. It's back with a vengeance. But you went on this Alaskan cruise, and you did that for multiple reasons. I think fair to say you did it for pleasure, but also for business to get some real boots on the ground DD, as the kids call it. What are your takeaways from just this latest travel experience that you're on?
It's not tax advice to call it an Alaskan cruise research. I've tried, and the IRS frowns on it. But to me, it always is. And you can make too much of the anecdotal stuff. Everyone goes to the mall and there's this store's crap, that store's crap. Most of that's kind of bunk. But I'm a seasoned professional in this stuff, Spencer. And so it's I know how to talk to the store managers. I know how to talk to the guides. I know how to figure out what's going on. I'll tell you what's going on. Americans are spending just a dump truck full of money. Just places are packed, places that otherwise would not be, the spending. There were a lot of fears about summer back in April, of course, for super logical reasons. And as you wisely touched on weeks and months ago, sometimes stuff just works out. It's what if things worked out really well, and that's kind of what happened, and it has led to a much better than expected summer in terms of spending. You're seeing it. The XRT is exploding today, and it's you quite correctly mock them and point out that the rest of the market's doing quite well as well. But so there's a lot of catch up ball going on here. But we're seeing 6-7% rises. Target's finally above 100 again. Best Buy's being bought. Dick's being bought. Williams Sonoma is being bought. It's kind of across the board. It's really strong, and we finally with this spending boost, you have a group of stocks that has digested the tariffs. And so everybody kind of understands that. They understand the political shortcomings, if you will, going on in the marketplace. But you've also seen a consumer that's remarkably resilient. And we've avoided the worst case scenario. Carnival guided higher while I was gone, while I was cruising. And again, sir, I defy you to say it's not about me. I took this personally as I read about this kind of 6 hours after it happened, the way cruises work. But it's in a bad economy, people stop cruising. People love cruising. First of all, it's just crazy, and I think the entire industry is just kind of stumbling on something. They've sort of democratized the cruise thing. It's not just for blue hairs anymore. It's the most common phrase I heard aboard the ship was, "I can't believe I'm on a cruise and I'm actually having fun." A little sheepish about it, myself included, because I realize it's not the coolest vacation, it's in terms of being hip. But man, it was a really good time, and they just vacuumed my wallet clean. Carnival's not beating in a bad economy. You saw Nike do better than expected, or less worse than expected. And with that spending boost, man, that changes everything. We've talked about it a lot. Consumer spending is the ultimate tailwind. So you kind of go from a stock picker's market to just pick a damn stock market. And that's what we're seeing in discretionary today. A super wide rally across a bunch of breadth of stuff that's just discretionary.
I want to back up for a second on the idea of consumer spending, because if you're paying attention last week, maybe you saw the headline that consumer spending actually fell in May. It fell sequentially for the second time in 2025. It fell by 0.1%. So whatever.
You're going to believe me, Spencer? Or you're going to believe those lying damn economists?
That's the point I'm getting at, right? There is a difference between anecdata, right, and the economic data that the government puts out, and the two don't always line up. And to Jeff's point, everyone has their own anecdotes and their own experiences and their own eyes with which they can see things. We all have the same economic data. The economic data is saying things are maybe showing cracks under the surface, but you're saying no, actually uh, we're in the throes of summer and people are just throwing money out left, right, and center,
Let
right?
me tell you a little trade secret, Spencer. You don't just look around and draw your own conclusions. That's what most people do, and they kind of it's just confirmation bias.
Yep.
People just kind of walk into a mall and they want it to be what they want it to be, and then they want it to fit their scenario. I talk to people. I grew up in a family of retailers. You ask a store manager what's going on, and you're actually conversant in retail. Everyone likes to talk about their job. You ask, a dozen tour guides in as many days, hey, how's business? And they all give you a pat answer and you say, no, really, how you doing? You own this business. How's it going? And they start breaking it down for you. Europeans aren't traveling as much as normal. No one's having a great year, according to virtually everyone I talk to, from waitresses to fishing guides to own raft companies to the cruise industry itself. So it's not just the eyes; it's the conversations with people along the entire route. You can't get the same answer 12 times in a row or variant of it without it being a wild conspiracy, or that's actually what's happening. And so you're seeing greater than expected American spending. But again, you're also coming off really, really low expectations. We're back to where we were at the beginning of the year in a lot of ways. Estimates have come down a lot of ways because the tariff's going to cost something. But we built a lot of fear into these stocks. And as they kind of pick up steam here, they become my favorite combination. You've got kind of better than expected fundamentals, not great fundamentals, but better than expected. You got companies like Nike that are just so easy to own in terms of a narrative. And you've got kind of decent charts as we get back to those old highs, and we've digested a lot of bad news. That makes for kind of an intriguing, at least, rally. And they have a little room to run before they actually have to say anything that would contradict this take and the momentum.
Okay, so let's talk about the cruises. So here's Carnival. You mentioned they had earnings last week, and the stock actually got hit right on that report. Or no, it didn't.
No, they
No,
spiked.
no.
They said they've
Yeah,
never had better yield
yeah,
ever,
yeah. Right.
ever. I
Okay.
mean, which again, people just like cruising. The opportunity here is that they've expanded the user base from just really rich old people to just the insanity that you see kind of on Carnival. Disney was the first group to do that. But the entire industry is just addressing a lot more consumers now. So it's kind of an affordable, or not really affordable. It's a high end type of vacation that is expanding its reach in terms of who it's able to address as an addressable market, and that changes everything. If you can suddenly kind of be selling cruises to millennials who have a little bit of money rather than their grandparents, you can make a lot more cash. And so the entire industry is kind of doing better than expected. But the best profit margins they've seen in 20 years in the business, from the CEO, that was the quote from the Carnival CEO. That you can argue with that? That seems like people spending money in a discretionary way, and fast and all over the place. Carnival is kind of the bad neighborhood of the ocean. But the truth is, man, they're doing really well, and that's true at the high end as well.
I was just curious looking it up. We're still a long ways away from all-time highs in
Oh,
Carnival,
so far
but
away.
yeah,
But these are hyper levered companies. They all have the same
yeah.
business model. Let's just borrow a ton of money and build big, expensive ships.
Mhm.
And, like all levered operations, that works really well until you don't get the top line you think you're going to. So they're hyper jacked, but you're a long ways from the highs. And again, you have a compelling story. A leverage model, you don't do that just because it's fun to explode every 10 years. You do it because in the intervening years, you make a ton of money. Every incremental dollar these guys make, it goes to pay off the debt, and
Yeah.
they're much better than they were before. That's why they almost died during COVID, and that's why they're doing so well now.
All right.
And this goes for the whole group, by the way. Royal Caribbean is that's the group I was with. It's kind of a classier operation and much better company in stock.
The other big headline while you were gone, Jeff, was Nike. They had earnings last week. So let's talk about apparel for a second here. Here is the Nike chart. Challenged is an understatement. That being said, uh, the stock did pop on its earnings and has continued to rise actually since its earnings report on last Thursday. What do you think about this? What do you think about the report? What do you think about the chart? What do you think about what you're seeing?
you know, Sort of wish I was long. It's a really good reaction to really not that great a news. when you it's easy to be cynical about this, which is why so few people were long this going in, and you're seeing the upgrades because it's a popular pitch to any kind of client out there in investor world. If you're a broker, it's really easy to say, hey, Nike's a blue chip, they're for sure going to come back, which is both kind of true, but without decent consumer spending, it's not going to get you anywhere. I still think the company's kind of at sea, if you will, in terms of what their strategy is, but it's no one owns it, no one believes in it, and so if they say orders are getting better, they reported numbers that were pretty bad, to be honest, but they weren't quite as bad as feared. And just a ton of fear gets built into that stock at 50, and you can own it. It seems like 80 is a foregone conclusion, at least getting back to the year highs. And if they can actually show recovery, which is possible, with again nothing like a spending tailwind to get people going. But if they can kind of show any recovery, fleeting though that may be, tied entirely to a macroeconomic situation over which they have no control, though it may be, Nike, it buys them time. It buys them the ability for institutions and individuals to be long something and to feel like they bought it on a dip and it's still so far off the highs and they have so far to go, both operationally and reputationally, that it's cheapish relative to where it is priced in the past.
See anything on in your travels that jumped out to you on the apparel front?
Of course, Ons are the hottest brand on earth. It's that stock is digesting and maybe it's not kind of breaking out. But I tell you what, if you're just going by the optics test that you saw, they are punching so far above their weight in terms of market penetration that it's just crazy. So I love that. Also, not as much Lulu as you would think, but if you look at that stock, that's behaving pretty well. That feeds into the Nike idea that we're talking about and kind of these distressed names that need a tailwind. Lulu continues to struggle. I didn't see a ton of penetration out there. Vuori, a public company based literally right down the street from me. Hi, guys. Got any friends and family shares for that IPO coming up? They are doing incredibly well. Really just huge penetration. But Lulu, that stock kind of wants to go higher because it's. I tell you what, the negative catalyst is going to be North America for them. A tailwind gets them to positive in North America comps much sooner than expected, much sooner than perhaps they deserve from a stylistic perspective. But you just have more spending than we previously thought. And that's going to kind of make it look like a turnaround even before it's not. Now, assuming the executives didn't just all get dumb right away, Lulu is kind of due to not miss a quarter horribly for the first time in 6, just statistically. That gives the stock a lot of headroom. Am I saying buy this? It's all clear? No, I'm saying it has room to 300 and a nice natural stop at old lows.
Did you see the thing about Lulu suing Costco?
Right. Did I mention they were lost? Yeah, they're suing Costco because Costco is making the tights that are too much like Lulu's and they're selling for $8. There's a lot of problems in that lawsuit, Spencer. Not Costco ripping you off is one problem. What you're saying about your own damn product is quite another problem. Yeah. It's a great ad for Costco. I'm long Costco. I'm not long Lulu. I'm just kind of giving it as an idea. But man, that's a problem. Now Lulu's been in this before. They sued Peloton last year. They're not averse to a good lawsuit, but it's going to be pretty hard to claim kind of ownership of the tight in general. I think the Costco suit, as I understand it, is based on you kind of implied that these are the same type of product, and it's like, well, the eyeball test suggests they're the same kind of product, so that's a problem.
All right, just to recap here, travel note number 1, Americans are spending all their money. Travel note number 2, still bullish on cruise discretionary and cruise ships. Travel note number 3, bullish challenged apparel like Nike and Lulu. Travel note number 4 from Mr. Jeff Macke. What is this? Just ride your winners?
It's easy to get cute. It's easy to want to buy Nike and I bought the dip on Nike. I'd love to be a hero on Lulu. I was frankly kind of super heroic on them about 10 years ago and rode it quite a ways up. There's nothing wrong with Uber. There's nothing wrong with it. If the consumers are spending kind of moving around domestically more than you would expect, and again, it could be anecdotal. Maybe I just got super unlucky and every airport I happened into was just maximum packed for the 2 hours I was there or the 3 hours I spent in Seattle trying to find a damn coffee. maybe that was just bad luck, or maybe people are actually moving around in huge numbers the way Carnival says that they are, and that's going to lead to the casino stocks. They're ripping higher today. People are moving around. You can get cute, or you can just buy something like Uber that just hit 90. It's near all-time highs. It's not an unknown story, but it's a really good story. And as I point out, stocks that get to 90, they go to 100. That's automatic. It was on the third tablet that Moses bought down, the one he dropped.
That is a line of conventional thinking, and it's true more often than not. Typically, stocks that go to 5 go to 10, and 15 and 20, and all the way 95 up to 100. So we are knocking on the door, and
It's
at
not
all
a
time.
Mensa test, folks.
Yeah.
People can quibble. You're inviting people to quibble on an intellectual basis that maybe it doesn't make any sense that stocks that go to 90 go to 100. But you know what? They do. But Uber mostly just has momentum. And again, the big theme here is that I think the summer spending, I think this quarter in particular is going to come in much better than expected for a lot of these discretionary stocks, much better than feared. And so that gives you both people that are underinvested and people that are short. Those are natural buyers. I love having natural buyers behind me in names that I'm already long. You popped up to Build-A-Bear. I've got a chart for them as well.
Oh, yeah.
That's at an all-time high. That's been explosively growing, and it's still at about 13 times earnings. Now, I was terrified as a long that they were going to get destroyed by the Chinese tariffs, and they didn't. They were going to get destroyed by empty malls. Well, the malls aren't empty. Those are two things that are kind of gone as fears, and people love to short them. They love to say it's just a fad, but man, they're 13 times earnings and they just keep beating like a metronome. There's nothing wrong with staying long kind of these companies that are doing well. It's what kind of, it's, do you think Nike's going to do better? I'm much more confident in Build-A-Bear having a strong quarter than I am Nike turning things around on an actual basis, but you can trade either one.
What I was going to say about Uber, they're actually on the doorstep of two round numbers, $100 per share for their stock, but also $200 billion for their market cap. They're at 191 and change right now. So they are knocking on the door of $200 billion.
American haters, they win if
Yeah.
Uber's not $200 billion. How dare we? What's the temerity? Do we not reward winners in the society anymore, Spencer? Do we not give the champion, the laureates, the crown, the huckleberry? Do they not deserve $200 billion? If nothing else, these poor people, these Uber sufferers, these longtime bulls, of course we deserve that. And that's what we're going to get.
All right, Jeff is back from his travels. He'll be writing proliferously about them to both his paid members and to people who get the free Mackie Retail Report. The links to both of those are in this description below us on YouTube. Check them out. Jeff, great to see you. Great to have you back, and looking forward to reading more on what you saw.
Yeah, it's nice to be back. I'm feeling loquacious and peppy and full of ideas, which is all the things you want after a vacation.
Excellent. All right, see you guys.